हेलो गाइस, वेलकम टू फॉरेक्स सैलरी चैनल और इस वीडियो में आपका स्वागत है। तो ये हमारा पॉडकास्ट नंबर 3 है और यहाँ पर आज हमारे साथ स्पेशल गेस्ट हैं जिनका नाम है अकील स्टोक, जो टियर 1 ट्रेडिंग को रन करते हैं और इनका खुद का यूट्यूब चैनल है जिनका नाम है अकील स्टोक। मैं ये कहूंगा, जब मैंने अपनी फॉरेक्स ट्रेडिंग जर्नी स्टार्ट की थी तो अकील स्टोक ही ऐसा एक यूट्यूबर थे जिनके वीडियो में देखता था, तो अकील स्टोक इंस्पायर मी टू बिकम अ फॉरेक्स ट्रेडर। तो ये एक बहुत बड़ी स्टेटमेंट है, मैं ये कहना चाहूंगा, क्योंकि इनका कंटेंट जो था इतना वैल्यूएबल था उस टाइम पर जब मैं स्टार्ट कर रहा था। तो इन्हीं की वजह से मुझे फॉरेक्स में इंटरेस्ट बना और किस तरीके से सिंप्लीफाई करते हैं चीजों को और समझाया था, उस वजह से फॉरेक्स में मेरा और इंटरेस्ट यहाँ पर बढ़ा था। अकील स्टोक को मैंने यहाँ पर बुलाया और हमने यहाँ पर उनका इंटरव्यू किया और यहाँ पर उन्होंने काफी वैल्यूएबल इंसाइट शेयर किए हैं और इन्होंने काफी स्टूडेंट्स को यहाँ पर टीच किया हुआ है और काफी लेसन यहाँ पर आप ले सकते हैं इस इंटरव्यू से कि किस तरीके से एक ट्रेडर को अप्रोच करना चाहिए बिगिनिंग से स्टार्टिंग के लिए, और क्या ट्रेडर मोस्टली मिस्टेक करते हैं और कैसे आप एक सक्सेसफुल ट्रेडर बन सकते हैं। तो गाइज, अगर आपको इस पॉडकास्ट सीरीज से हेल्प मिल रही है तो प्लीज लाइक द वीडियो, शेयर कीजिए, कमेंट कीजिए, ताकि इससे मुझे भी हेल्प मिले और मैं इस तरीके से ही आपके लिए वैल्यूएबल कंटेंट बनाता रहूं और जो प्रॉफिटेबल ट्रेडर हैं जिनसे आप कुछ सीख सकते हैं उनको यहां पर मैं बुलाऊं। चलिए चलते हैं वीडियो में।
So hello guys, so welcome to Forex Salary channel. Today we have a special guest with us, AKIL Stock from States. He is a co-founder of Tier 1 Trading. He also run his own YouTube channel podcast with the name AKIL Stokes. And he's also in athletics. And he's one of the person who inspired me to come to the Forex trading. And I was really looking for his video and was learning a lot of things from him. So AKIL, welcome to Forex Salary channel.
Thank you for having me. Excited to join you guys.
Tell us about my audience. Some of them, they don't know about you. What is your journey is like? If you can give a brief introduction about yourself.
Sure thing. So I got into trading kind of by accident. Didn't plan on it, but I started learning about investing out of college, and while learning, I fell in love with it. I liked the game, and I saw that you can make money out of it. At the same time, I was at a point in my life where I didn't really know what I wanted to do. I didn't have any jobs, careers. I was still in school, and I was kind of tired of just doing the normal 9 to 5 and working all the time. I was working like 3 odd jobs, like 18 hours a day, and it was good money, but it was just like it was draining. And I saw investing as a way out of that. I saw trading as a more active way of investing, and like many people, I thought the journey would be a lot easier and quicker than it was. But there were some very powerful lessons, both on the trading side and the personal side, that I learned during that time. And I was able to stay at it, fight through it, never give up on myself. Eventually found myself on the other side as a consistently profitable trader. And I've been scared to death to go back to the down days. So it keeps me hungry and motivated to just keep learning and keep trying to get better each and every day, even up to this point in my career.
Okay, good. Yeah, I heard some of you in the interviews. You said you were working as a janitor as well. Yeah.
Yeah. I was cleaning
Yes.
toilets and banks,
Yeah.
and not the greatest, not the most glorious of
Yes.
jobs, but paid the bills.
Yeah, guys, it could be a really inspiring. It's like doing the 3 jobs, and then like a janitor job is a very tough job, and he was like looking for something different. So really inspiring for me at that time. I was like thinking 3 jobs, and this guy can do it. Yeah, I can still also do it. So that's a good journey. So you come into the trading, means like, but how you got introduced to the trading, means like, where did you get the trading bugs? Why trading?
Um, I got into investments first simply because my dad always did a good job of teaching me about different investments, like from a young kid, just like putting money into a savings account and then money market, CD, stuff like that. And when I graduated college, I had some money saved up because I've worked my entire life. I don't really spend money on much. And he said, hey, the next level is to, maybe get active in the financial market. So I threw some money into the stock market, and like most people, once I put it in, I'm checking it every day and doing that on a daily basis. I just became more and more intrigued with the game. The problem was that I didn't have enough money and to make long-term investing kind of like a thing that paid the bills. But one of my best friends introduced me into trading, and specifically Forex trading, and essentially told me that it was a much bigger market, more liquid, you can trade or get started with less capital and make money quicker. So hearing that it's more activity, I can start with less and make more in a shorter period of time. I'm like, hey, I'm all for it. Let's give it a go.
And was it like a painful journey, or it was like a smooth journey for you to getting into the trading?
Very
How long
painful.
it took you?
The journey definitely was very painful, very depressing. Anything that you can insert there. I wasn't one of those people that thought it was going to be a get rich quick scheme, but I was good in the stock market, and I bet on myself, and I thought I'd be good in trading pretty quickly. Like for me, I tend to figure things out pretty quickly. I work extremely hard, and eventually I work hard enough, and it works. And the trading journey wasn't the same. I worked extremely hard, and I kept going backwards or remaining in the same space. So it was very frustrating because I couldn't quite figure out what I was doing wrong or what I needed to do to improve. And because of that, there were lots of ups and downs and happy moments and dark moments in my journey. And even after finding a coach, finding a mentor, and getting educated properly, which I thought would be another kind of quick fix to success, I still struggled for a bit. And it wasn't until I figured out the whole kind of had a full understanding of what trading is from both a technical and a psychological side that things started really coming together.
You mentioned about the mentor. So for a new person, if he's starting a trading journey or a career, do you think finding a mentor will be helpful in the beginning, or they can do their own? What is your perspective?
So when it comes to finding a coach or a mentor, I say this, you don't need one. You can certainly do it yourself. And I believe that for anything in life. The question is, how much time do you want to spend trying to figure it out, going through all the trial and error until you eventually get it? So the benefits of finding a mentor is it shortcuts that journey. A mentor and a good coach should let you know the proper way to do things. They should guide you along the path. They should give you a heads up of what to pay attention to, what to look for, what hurdles you're going to face on your way. They should prepare you to go through that journey and give you the best opportunity to get through it in the quickest amount of time, meaning that you're still going to struggle, you're still going to have setbacks, but you're not really lost. You kind of just got to get your head on straight and do what you're supposed to do. When you don't have that mentor, and this is what I was doing for the longest time, I was just making mistakes. I didn't know why I was making mistakes. I didn't know how to fix those mistakes. I just kept trying stuff until it worked. And you can get away with that, but in trading specifically, when you're risking money, you can only do it for a certain amount of time before you go broke, and then you can't play the game anymore. So I do think a mentor, having a coach is important. Is it necessary though? No.
So it means that it can reduce your learning curve. Means with your own, you can have it longer time, but with a mentor help, you can reduce this learning curve and you can be profitable earlier because you can replicate what he was doing.
Yep, correct.
Yep. Exactly. So, but in this fast world, with today, like many people, they are showing so off many things, car, Ferrari, and money. How to find a real mentor? Means what they can look for in a real mentor.
It's tough. I would say the biggest red flag is if you see any of that stuff where they're selling you a dream, or it seems like they're selling you a dream with the first kind of like introduction is like, I make this much money, I have this, I have that. That's probably a red flag. You want to look for people that just seem truthful. You want to look for people that are going to tell you the harsh realities, meaning the struggles that come with trading, the good, the bad. They're not winning all the time. They take losses. They tell you how to handle it. And people that just seem to have a consistent message. And one big red flag with kind of these the scammy people out there is that they're going to flock to whatever the in message is, whatever is trending. So if it's smart money concepts, if it's this, if it's that, they're going to flock to that because they know that's what's going to get your attention. The true mentors and coaches out there, their message is going to be pretty consistent across the board. And I was speaking to Jason the other day, and the cool thing is, if you look at our YouTube channel and the message that we've been preaching the same message before it was cool. We were preaching the same message of the reality of trading when people used to yell at us for being, discouraging and whatnot. And, although we've evolved as traders over time, the same common principles of what it takes to be successful in trading haven't changed and will never change.
Yeah, truly the fundamentals never change, and you're right. You look for the right things, who is not flashy things. You are still a fundamental or technical trader? What you are at the moment?
Technical traders, charts. Yep, I understand fundamentals now a lot more than I did years ago. But still, every decision I make from a trading perspective is based off the technical, so the chart.
Okay. Back then, you were trading mostly the patterns, chart patterns, Gartley, because I was learning all these things from you, all these patterns. Do you still trade them, or your strategy evolved after some time?
Yeah, I still trade them. They are kind of a cornerstone of my strategies, or one of my strategies. I call them old reliable because they're boring, they're repetitive, but they consistently churn out money, which works for me. But I've also continued to evolve my strategies, add strategies, tweak strategies over time. So I'm always looking to grow as a trader. Each year I do about 2 sessions of continued education where I educate myself on new concepts, or I test out new concepts in hopes of always adding something, because the markets are always changing. And if we're not adapting with them, we're going to get left behind.
You also said trading is boring. This is like a
Yeah.
cliche I heard a lot of time. So can you like elaborate this thing? Trading should be boring.
Trading is boring, and that's a good thing. Trading is boring, and that is a very good thing, because it means you're consistently doing the same thing. I like to say consistent analysis plus consistent execution equals consistent results. Meaning, if you're analyzing the markets the same way, if you're taking the same type of trades on a consistent basis, you're going to get the results that you expect. So it's not fun, flashy, surprising. You're not finding something new each day in the market. You're pretty much clocking in and doing your job. And it's a boring, repetitive process because you're going through the same steps every single day. But that's what successful trading looks like. You should have some type of consistent idea of what you should return and a consistent approach to doing it. If you're hopping around, being a system hopper and going from one thing to another, you're getting excitement, but that excitement isn't necessarily making you money.
So your trading is more mechanical or discretionary? Means like it's keep changing or something?
I like to call my style of trading rules-based discretionary trading. So there is discretion. I do have the ability to interpret the markets and read and evaluate things, but it all works within kind of a rules box. So I just can't get out there and trade whatever I want to trade. There are certain things I have to trade. There are certain ways I have to trade them. But the way I interpret a swing in the market, a specific candlestick, a candlestick combination, right? I allow myself to have that discretion and make that interpretation on my own. So it's rules-based discretionary trading. I like to call it kind of the best of both worlds, combining the art and the science of trading.
I like the definition. Yeah, rule-based discretionary trading. Yeah. If someone is looking for, means like a new trader, whether they should start with the one like a strategy, or they can indulge 2 or 3 strategy in their trading plan or program. What do you think, or what you did in the beginning also?
As a newer trader, I would start with one strategy. I think the best way to go about it is to learn one thing, focus all your energy on that, get really, really good with one thing, and then start making money off of that one thing. And then once you're making money off of that one thing and it becomes repetitive and boring, as we just spoke about, now you have time, energy, and effort to start working on that next thing. You can slowly just start building and adding strategies. If you're trying to focus on too much at once, you're just splitting your energy, you're splitting your focus. It's like busy work. You feel like you're doing a lot, but you're not really getting a lot accomplished, and it opens the door to a lot more mistakes. So start with one thing, get good at that one thing, make money from that one thing, and then add once that one thing is kind of repetitive and boring to you.
You're also in athletics, so there must be some, of course, we heard the discipline and everything. How you can relate this thing to your trading and how it helps you in the trading as well?
So trading is very similar to athletics. I look at it as a competition. It's me against, well, I wouldn't say me against the markets, but it's really me against me every day. But just like sports, when you come to practice, you want to show up and be your best. You have that motivation to learn something, to improve. And I think that growth mindset in trading goes hand in hand. The discipline of it is key too, because understanding that we have no idea what the markets are going to do. The markets can do whatever they want, whenever they want to. And we have to accept that, and playing sports taught me that matches and games go like that. Sometimes you're just going to be up against a better team. Sometimes you're going to have a good game. Sometimes you're going to have a bad game. Sometimes you're going to make mistakes. And the best thing that you can do is trust your coach's game plan, trust yourself, and have a short memory. So when you do make that mistake or you take a loss, you're able to kind of look at it from a growth perspective, learn from your mistakes, go back to practice, improve, forget about it, and then move on to the next match and attack it with full energy once again. So sports has definitely helped me in many ways, especially the psychological side and when it comes to becoming a disciplined trader.
Okay. So you said me and me, that's I like it, but you said it having a short memory. So we should forget our trades completely, or we should keep a lessons or keep means like finding what mistakes we are doing so that we should record them and try to improve them. Miss, what sense you said it's short memory?
Yes, when it comes to having a short memory, we don't want to let previous trades affect future trades, whether it's a win or a loss, right? So we don't want a bad loss to scare us out of our next trade, or you don't want a bad loss to cause us to get revenge and trade with bigger size on our next trade. We don't want a big win to cause us to take a trade we're not supposed to take because we're invincible, we're untouchable, we're on fire. We want to be able to learn from our trade. So, after a trade is over, you evaluate it, you review it, you see if you did everything right. I like grading myself on a process perspective instead of a results perspective. And then we jot it down, we move on to the next one. And then there comes a period of time during the year where we go back through our journal and we look at our results and notes for any tendencies. And if there are consistent tendencies that are being made, maybe that allows us to make adjustments to our strategy. Maybe they don't. So we don't want to just completely forget it. We do want to learn from it and use those as experience points, but we don't want to carry that baggage with us to the next trade because each trade is going to be an individual.
Yeah, even if it's a good trade or bad trade, as you said, it's a completely new trade all the time. So you have a athletic backgrounds, you have a discipline, but many of the traders struggle with the discipline. They don't have such a kind of a thing. How they can overcome or they can maintain the discipline? What advice you can give it to them?
That's a tough one because a lot of that you need internal motivation. That you could use all the tricks in the world to try to become disciplined, but if you don't actually want to become disciplined, it's not going to happen. I deal with there's a player on my kid's soccer team where his dad wants him to get good, and he's like, "Hey, if you want to get good, go outside and kick the ball against the wall 50 times a day with your right foot and your left foot." And the kid's like, "Well, I don't want to do that." And it's like, well, that's what it takes. So at some point, you can give someone all the direction in the world, but they actually have to take action, and discipline and is the same way. We can give you tips and tactics on things that will help you become disciplined. We can give you tips and tactics and share a few why it's valued to be disciplined. But if you don't actually make attempts at doing it, you're not going to succeed. And it is one of those things where experience matters, where it's hard to be disciplined on day one. But if you just like any other habit, right, if you're consistent with it through day 30, it becomes easier and easier. And then when you start seeing the results that come with that discipline, it becomes even easier. But it's tough to get the ball rolling and make it a habit, especially when it hasn't been one in the past.
So yeah, in the beginning it's difficult, but when it's become automatic, we have to be in like an automatic state. Yeah. When it's come to like a driving, the same has to be with the trading. These are the rules. Okay, so it should be like automatic. Does trader background or a person background affect into the trading? Means like he's an engineer or doctor. Will he be a good trader or a bad trader? Is something related?
So I think your background does affect your trading. And the sports background helped me become very disciplined. My mentor had a military background, so he was extremely disciplined because he was used to that in the military. I think the analytical nature of maybe being a doctor, a scientist, or even if you enjoy doing puzzles, right? The market is like one big puzzle, and you're deciphering it. So if you're good at puzzles and word games and stuff like that, those skills can give you an advantage in the market. So I don't think it's necessarily an IQ level. You don't have to be super smart or anything like that, but you do have to have skills that are related to trading. And I think one of the coolest parts about the journey is we don't necessarily know what those skills are until we get into trading, and then we learn more about ourselves through trading and how it affected it.
This is like a finding your own character. Yeah,
Mm-hmm.
truly. So the thing is that, okay, many traders, they don't know about like, okay, what they will face, what problem they face, all these things. So what they can expect, like how long it can be a journey to become a profitable for a trader, means what they can expect. They ask me so many times the same question again and again.
So how long it takes to become a consistently profitable trader, it's going to vary. We spoke earlier about mentorship or doing it on your own. Having that mentorship, that coaching is going to cut down on your learning curve. It also depends on what state of trading you're at. Are you brand new and you know nothing about the markets? Do you have experience? Do you have a bunch of bad habits that need to be broken? Are you fresh and no bad habits and you're an open sponge? How much time you have to invest in your education as well, right? When I started trading, I was investing about 12 hours a day in the learning, right? I'm going to progress much longer than someone who can only put in 2 hours a day. So all of those factors play a role. Typically what we see is a range between like 12 to 18 months to become successful trading. And that goes through the learning process, the strategy development process, the back testing process, and then the weird, the weird process where you're trading, but you're live trading, but you're not really good yet. And you're working through those humps to finally getting over that hurdle and becoming consistently profitable. So I would say 12 to 18 months would be a proper expectation, but it could be shorter, it could be longer, depending on your personal situation.
Right, exactly. And depends, as you said, at the time. Later on, it's like the less you put, because people should not be sitting in front of the computer all the time. It's like once you become a consistent, profitable trader, then it should be less is more. Is it right?
Yes. 100%, 100%.
Do you think that traders always evolve, as you already said it, that what you were using it 10 years ago, you still use it, but the trader has to keep changing it, keep finding new things? They should do like that, or they stick to one strategy, or what is working for them, they should stick with that?
So I think traders do need to evolve. Just in my experience, the market conditions, the way the markets were when I first started trading are completely different to where they are now. So, and you'll see this if you go through historical data, different tactics are going to work differently. Now, this doesn't mean that you need an all-out change, right? Some things will work consistently. You know, the P&L or the expectation will vary a little bit. But I do think a trader needs to keep evaluating and be able to make little tweaks, that not necessarily changing your system and ditching one and going to other, but making little tweaks. Maybe you enter a little bit differently. Maybe you exit a little bit differently. Maybe you give yourself a wider stop loss for protection. Maybe your targets are a little bit closer because the market isn't as volatile as it used to be. In my experience, it's been small tweaks like that have made the major difference versus kind of just a system just failing. Because if we're testing a system correctly, we should ensure that it works under different market conditions.
Do you still journal your trades, or is it like a long enough now I don't need to do that? So do you do that thing?
Yeah, I still journal, not as much as I used to. I still journal more quantitative. When I was younger and making a lot of mistakes, I used to be more of a written journal where I'm talking about my feelings and why I messed up and doing stuff like that. And you know, it's a little bit different now. I don't make as many mistakes. I still make a few a year, but it's not as many mistakes. But at this point, I know exactly what I'm supposed to be doing. So the journaling is more so observations about the trade versus kind of like a personal insight. But yeah, I still journal. I still log trades. I believe all of that is important. It's just not as, I guess, introspective as it used to be back when I was brand new.
So trading, as you said, mistakes, you still do mistake. Every traders do is those mistakes. But so there are emotions. So how you can control and manage your emotions? What makes you control them?
I manage my emotions pretty easily these days because for better or for worse, I think trading and the business side of trading has made me pretty numb. I'm not a person that has like, I'm not very empathetic in general. I'm pretty robotic from my sports days. So I just don't let stuff bother me. But I think the bigger picture is I understand my edge. I understand that I've been a consistently profitable trader for a very, very long time now, but it's come in different ways, right? Sometimes I've been hot at the beginning of the year, then I cool down in the summer, then get hot again. Sometimes I've been horrible in the beginning of the year, and then I get good during the second half. Like it comes in different ways, but it always comes to the same spot. And it allows me to understand that trading is kind of a long-term game. So no individual trade makes a difference. So a win doesn't really make me happy. A loss doesn't really make me sad because I know that it's only one very, very, very small piece of a much bigger sample size. And that way I don't let that kind of emotion stay with me for the next trade. It's just kind of just like going through the process, checking the boxes, on to the next one.
So like the sample size, you said it, and you're saying that how you measure. So you measure yourself monthly, quarterly, or yearly basis. Are you a profitable trader or a losing trader, or how the people should measure their own? Means like bucket of trades, or monthly, or weekly, or yearly? What should be the approach?
So how you evaluate yourself, I think, depends on your style of trading. Obviously, a day trader working a lower time frame is going to probably have a much shorter duration than a swing trader. At the end of the day, yearly is the biggest number that matters for me. So when December 31st comes, or a little bit before that, if those numbers are positive, then I did a good job. but I do an evaluation every quarter. So every 3 months I check, because I think that's a big enough sample size for me to tell if things are on track and then see if I need to make any adjustments to my trading. When I was day trading, I used to do a month to month sample size. It was really still quarterly that I cared about, but I would look at things month to month. But that's because I had much more frequency on the lower time frames than I do on the higher ones. So I think quarterly is key, but yearly is the main one that should make a difference.
So now you don't do the day trading, you are a swing trader on a higher time frame?
Yeah. So I don't venture underneath the hourly anymore.
So like a 4 hour, what is your main time frame for?
4 hour, yes. So I use the daily as my higher time frame. 4 hours my main trading time frame. So I spend most of my time on the 4 hour.
So like a 4 hours, if you're looking at 2 to 3 trades, and how many pairs you analyze, and a weekly, how many trades you take?
I'm looking at how many pairs in my portfolio? 11, I think. 11 pairs in my portfolio, maybe 11 or 9.
It's a major pairs or something else?
Yeah, so mostly major pairs. I can run through them: euro dollar, pound dollar, euro yen, pound yen, dollar yen, Aussie dollar, New Zealand dollar, dollar Canada, Aussie Canada. There we go. So 9 right there that I trade. And I probably take about anywhere between 15 and 20 trades a month. So my frequency is not too high, but I find myself trading less the more experience I have. That number has gone down, but the quality of trade I've taken has gone up. So that's a positive thing.
So yeah, as you said, it also becoming a numb. So neither losing trade make you depressing, and winning trade excites you. That's the ideal stage for a trader.
Now, don't get me wrong. A losing streak. I get on a losing streak. I'm still human, so I'll still come like, come on, let's get a win. But I'm still human. But I've learned not to act on my emotions. So I still feel emotions, but there's a separation where I don't let those emotions turn into actions in the market. I'll go to the weight room and lift some weights or punch the punching bag if I get frustrated. I'll get it out that way.
New person or a beginner, if they want to get over from the emotion, they should stick to something, others do something else. How they should do it means get over from the emotions.
Yeah, if you feel yourself getting into an emotional state, get away from the markets. Right, the worst thing you can do is be in the market in an emotional state, because you're going to make a mistake. That's like a gambler that lost money and they're still roaming around the casino. Like, you're going to find yourself at a table or a slot machine trying to gain it back, and you're just going to lose even more. So get away, right? Do something else. Have balance in your life. Find something to get that emotion out of you. Like I said, for me, I always go to sports. So it's like I'll go for a bike ride to decompress, or go to the weight room, or do some boxing to get that frustration out of my system. And I find that if I can get it out of my system that way, by the time I return back to the markets, I've come kind of settled and neutral again. So you got to find something to be like a pattern interrupt to kind of get you out of that state, and then return once you're back in a good state.
Yeah, back then you also mentioning about having a checklist, and you were also recommending. I was watching your old videos, like go into the mirror, first thing you check your checklist and then do it. Do you still have this checklist? You do this thing or not?
Yeah, I don't have the same physical checklist like I used to. Actually, I used to have a piece of paper printed out, but yeah, a mental check before my trading day. Did I get enough sleep? Am I in a mental or like an emotional state? Was there like a bad breakup or a death in the family? Am I sick? And basically, am I in the right mind state to trade? And if you're not in the right mind state to trade, it's best just to not trade, because you're just going to make a mistake. So, I'll have days that usually right now, it's just like if I'm really, really sick and like I know I'm not seeing the markets correctly, if my head is blurry, it's just not a trading day, because I know I'm not seeing things correctly. I'm not sharp. I don't want to risk my hard-earned money when I'm not in a sharp position. So I'll just call it a day. But yeah, I think having that checklist is important, because sometimes you don't get enough sleep. Sometimes you're still carrying over the emotions from the other day. Sometimes you're at the bar too late and you didn't get home. You're not in the right mind state, or you had a bad breakup and you're just emotional. But you can't have that stuff when you go into the market, because it's gonna convert into some type of trading mistake, and that's gonna cost you money.
So you also build like a trading routine, or you have some like a daily routine which you follow religiously or something, or traders should do like that?
Yeah, I think all traders should have a routine. Routine should not just be your trading routine, but you should have a routine in how you analyze the markets. There's a reason I was able to, tell you my portfolio, because I look at those same pairs every single day in the same exact order, the same exact way. But there should also be routine like any other business. Like, what time do you wake up? What time do you eat breakfast? Do you do some morning yoga, some mindfulness, or do you hop straight into the charts? I know for me personally, I found that if I hop out of my bed right into the charts, I may be awake, my body's awake, but my mind's not really awake. So I find myself making mistakes. So I have to spend 30 minutes of doing other stuff, checking emails or doing some busy work before I can start trading. I used to have, before kids, I used to do like a 30-minute session of yoga in the morning, but kids have taken away a lot of my sleep. So I decided to get an extra 30 minutes there instead. But I had a checklist of things that I do before I enter the market. That way I can ensure that when I enter the market, I'm sharp and I'm ready and I'm not rushing into it.
You said also, so 9 pairs in your portfolio. So do you have a specific session? Is it according, because you live in the States, so you trade only US session, or you trade also European session or Asian session as well?
Yeah, I'll trade any session that the signal comes. Now, when I day traded, it was strictly the New York Open to the first half of New York. But as a swing trader on the 4-hour charts, we're only getting a few candles a day, and those opportunities can come at any time. Now, I don't wake up in the middle of the night or anything like that to check opportunities. If I miss one, I miss one. I'll look for secondary chances the next day. But yeah, if the trade comes, 6 o'clock in the morning, then that's when the trade comes. If the trade comes, 7 o'clock at night, that's when the trade comes. I need to take advantage of it.
Okay, so all the time, are you in front of the computer, or you just have some application, or you do with the mobile app?
Yeah, so I'm not in front of the computer at all. I think a lot of traders think you need to be a slave to your screen, and you got to be in front of your charts for 20 hours. If you do good analysis, then you're going to understand when opportunities are close and when opportunities are not. So when I do my analysis in the morning, I can tell that, hey, this is something that's probably going to fill later today, or maybe this is something that's probably going to fill, next week. And because of that, I can prepare. Also, because of my consistent reasons for entry, I know candles in advance, so hours in advance, whether I'll be taking a trade. It's never a situation, or rarely a situation, where a trade sneaks up on you. It's like, oh crap, I got to enter. Usually it's like, okay, I need 2 more bars. So that's at least 8 hours before I can enter. Let's make sure I'm back at the chart by 8 hours, or just set alerts for if a certain price point is hit, where it's like, hey, if price needs to come to a certain level of structure, let's put an alert at $1.60. And then when that $1.60 goes off, look at the phone and you kind of know, okay, I got 2 more hours. I got to enter next bar market. That's an hour from now or 2 hours from now. Let's make sure I'm back in front of my computer. So if you're very organized and disciplined at how you do your analysis, you'll find that you don't need to be in front of your charts all the time.
Also, now I want to come to onto the trading plan exactly, because trading plan is like it's like a GPS where you are going. If you don't have it, you don't know where are you going. So do you have a trading plan, or if a new trader wants to start, how he can develop it in a trading plan, and what should be the key elements in the trading plan?
Yeah, a trading plan is like your business plan. It tells you how to operate it. It should answer any question that you have about the market. So you should never look at a chart and ask yourself, should I be doing this? Should I be doing that? It should be in your trading plan. If it's not, then you shouldn't be doing it. It's a simple answer. Your trading plan needs to involve, from a technical perspective, your rules of engagement. So what are you looking for on the chart? What needs to happen? I always advise that this is written down in kind of a programmer type of sense. We call it if-then syntax, where it's like one step at a time. If X, then A. If B, then C, right? Just keep going in that order, and you move from one step to another, and it keeps you organized. But a trading plan should also involve a psychology section, philosophy and psychology section. What is your philosophy about the markets? Technicals, fundamentals, trend continuation, counter trend, psychology. What are things that are going to keep you disciplined? Do you believe in discipline? Do you believe in mindfulness? What is your routine, as we just spoke about? What is your money management and position sizing strategies, right? How do you know how large to trade, how small to trade? When do you take money out? When do you keep money in? Emergency contact. What is your broker's email? What is your broker's number in case, like, power goes out and you can't get out of your trade? It's a little bit easier now because things are on mobile. But before that, I've had instances where internet cut out and I had to call my broker, like, get me out, get me out. So all of that should be in your trading plan. Essentially, anything you can think about in your trading should be in there. Even continued education, accountability buddies. If there's someone that, hey, make sure I call Danny once a month to talk about how my trading is going. It's kind of your full business planning, and kind of like your trader's Bible, I guess you can say.
So it can be more than one page. It can be multiple pages plan.
Yeah. It could be multiple pages. I like a short trading plan. I think mine is about Well, I got a bunch of different strategies, but mine is probably about 6 pages.
Okay.
I don't think you need, and that's just because I trade a bunch of different ways and there's like pictures and stuff in there, but I don't think you need a 20-page one, but it's whatever fits your fancy. I've had people that have done complete trading plans where it's simply like graphics. It's just like one big, someone sent me the other day, is just a flow chart where it's like a picture of something and an arrow and it goes to this and it keeps going down. And it's like, she knew what it meant. So that's all that matters. So it's however you want to make it, as long as you can understand it.
Yeah, I also keep myself with like my past trades pictures. So I have,
Yeah.
I took this with this strategy, I took with this strategy, and this is my personal trade. So it like resonate with me, and I have a confidence in that. Now I want to come to the question is like for trading, the strategy important. We talk about it. We talk about the psychology, but what is the main thing? Is it like this is more important or this is more important?
I think both the strategy and psychology are equally important. It's hard because you need both, right? You can be the most disciplined trader in the world, but if you don't have a strategy that makes money, you're not going to make money. You can have the best strategy in the world, but if you don't have the psychology and the discipline to consistently trade it the right way, and you're not gonna make money. So you need both. You need a strategy with an edge. You need psychology. Now, if I had to choose between the two, I would say psychology is typically more important, mainly because there are so many strategies out there, right? It's not hard to find a strategy, right? There's millions of YouTube channels on there now. A lot of those strategies are fake, but there are millions of YouTube channels that have strategies and tactics that will teach you how to trade. But if you don't have that psychology, it's going to be pointless. So I think psychology is more important just because you don't have to go out and create your own strategy. You can find something that already works, but you need that psychological element in order to actually make money from that strategy.
You taught many students also in a tier one trading or earlier part also, and many students you come up. So what problem they face, the biggest thing they are like facing, and it's a more common. What do you think this one and most of the traders face it, and how you can overcome problem?
It is psychology. I think it's
Right.
psychology and proper expectations where a lot of traders just want to sabotage themselves. They want to make money. They want to make money really, really quickly. They don't think psychology matters. And then they see themselves losing money and they see themselves making mistakes. And then it takes a while to figure out that, oh, it's because I was making mistakes. That's why I lost money. And I was the same way in my journey. So I think that's the biggest thing. From a technical perspective, reading a price chart, that's probably the biggest hurdle I see. And mainly because it just takes experience, and experience just takes time. And it's going to be difficult on day one. It's going to be difficult on day two until you develop your RAS and your reticular activating system, your ability to kind of see the markets in a different way. You're not going to be good at it. And I think it's frustrating for a lot of traders because it's just one of those things like, learning a skill of a sport. Like, you're just not going to get it greatly on day one. You just have to kind of wait out that time until you're like a month down the road for it to kind of snap in and make sense. And it's hard for traders to kind of be patient when it comes to that.
As you said it, you are a 4-hour trader. Means like you watch that. Do you watch also below time frame or higher time frame? Because many traders they just go from hover around from time frame to time frame and they end up somewhere else.
Yeah. So when it comes to multi-timeframe analysis, I just like the rest of your trading plan, you need to be very strict and you need to have a routine of what you do. I don't believe you should time frame jump because there's going to be no value in that. It's only going to get you into trouble. We call that trade hunting. So I look at 3 time frames. I look at the daily as my higher time frame, the 4 hours my trading time frame, and then the 1 hour as my lower time frame. And I progress through them in a very consistent fashion. I look for each one for a very specific reason. So for example, I cannot take trades on the daily, right? I have a 4-step process called IPDE, identify, predict, decide, execute. I can only identify and predict on the daily. I cannot take trades. So even if I see something juicy on the daily, I can't take it. I can only take it on the lower time frame. So it is important to have a higher time frame to gain perspective. I think a lower time frame is important as well because you can find clues that don't exist in the middle. But you have to predefine what you use each of those time frames for, and you don't want to look outside of those time frames.
Yeah, ITP, I still remember that from your old videos. Yeah, that's a good thing.
Never changes. Yep.
Never changes. Yeah, the fundamental. Yeah, you're sticking to those things. So, what would be your one advice? Means like for developing an edge. If somebody wants to develop an edge should they go for a back testing or a forward testing? How they should build their strategy?
I would say both. If you want to test your edge, you need the back test and forward test. Back testing will show you if your strategy actually works, which is somewhat important in trading. Forward testing will give you experience trading it live. And I'll tell you what, not everything that works in your back testing will work live. I had a situation where I developed this strategy on the range bar chart, so a very low time frame or time type of frame, and it worked beautifully in back testing. But in forward testing, when I was actually demo trading it and taking the spread into account and slippage and the speed of the market, it actually wasn't profitable because I wasn't able to get into those positions at the speed that I needed to. Where in back testing, you always get the perfect entry.
Yes.
So I do need to think. I do think you need to back test, but you also want to make sure you can execute your strategy in the live markets, and sometimes that's easier said than done.
And are you still doing the back testing? Because many traders, they're still doing it to gain a confidence, to have a routine. Do you still practice that?
Yeah, I back test whenever I develop a new strategy.
Okay.
For the strategies that I trade, there's no need to back test it anymore. They've already been back tested. But now your I guess your current live trades become your back testing trades. Your sample size is still increasing. So I can look back to when I was trading this stuff live since back in 2009, and I still have those results. I still have that data, and I can look back at that for any tendencies and stuff like that. So I'm not jumping back and back testing anymore back in 1991 or anything like that, but I'm using the data that I have for my live trading to grow my sample size.
Also, regarding the students, when I come to the students teaching, means like, do you think from your intuition that this guy cannot be a trader, he should leave this, or he has it, he can go forward? Means, can you feel that thing when you are teaching to the students?
Yeah. I want to believe in everyone. Again, I don't think it takes a certain type to be a trader. You don't need a fancy degree. I don't have one of those. I like to say, if I can become a trader, a successful trader, anyone can. But over time, you can tell habits and see if someone kind of has it or doesn't has it. And it really depends on their action. So like, if you're consistently making the same mistakes over, and we're giving you advice, myself and other traders on the platform, we're telling you, hey, you got to do this, you got to do that, and they're not doing it, I'm going to start questioning their discipline. If someone is asking me questions on a daily basis and showing me back testing results and participating in the live rooms and sharing stuff, and I can see that they're growing, that person probably has a future. So I never give up on anyone, because everyone learns at their own rate. Again, I made a lot of mistakes in my career before I finally got smart enough to change. But just like in sports and coaching sports, you can kind of tell when someone has those, or is at the point where they're ready to really get good versus someone that needs a little bit more time.
Do you recommend some books? Means like, if some books or even help you in when you were doing the trading and when you were starting?
Yeah, I've got a lot of books. I got a big old library. You can see some of it on the right-hand side over here. There's a lot more that you don't see. But I like recommending these 3 books. I like recommending Market. You got to go out there and read about it, and then you're like, oh yeah, that was me. Now it hits home a little bit more. And then I would say One Good Trade by Mike Bellafiore. Mike Bellafiore is a good friend of ours. He runs S&B Capital, which is a brick and mortar prop firm, and I think that's the best book to tell you and show you what an actual trading business looks like, and what top 6-figure traders are actually doing. And it shows you kind of the mindset, the discipline, the routines, the efficiency in which they operate. And as retail traders, we want to operate in the same way. So Market Wizards, Trading in the Zone, One Good Trade. Those are 3 books I would recommend. If you want a technical book, The Art and Science of Technical Analysis by Adam Grimes is a great one as well.
Okay, I think I lost you in the middle, but yeah, you repeated them like 4 books, so that's a good thing. The question I can ask you in the last minute, like we are reaching also like about an hour. So you already from a long time in your trading journey. So if you are going back 10 years earlier and 10 years younger, what advice you will give it to yourself when you were doing the mistakes? What will be the advice for you?
Advice for a 10-year
younger AKIL.
10-year younger AKIL. Advice for a 10-year younger AKIL. Can I say don't get into trading? I would have kept my hair. All the stress. I guess that comes with the territory. Don't rush. Don't rush would be the best advice that I would give. I rushed through the process. My mentor and coach told me things were important, and I kind of said, they're not important. I'll figure it out. And eventually I learned they were important. Now, I don't have any regrets because they were learning experiences, but I did waste a lot of time kind of not doing the things that I was supposed to do, even though I was warned that I need to do the things that I was supposed to do. So if I had to give my advice or myself advice from 10 years ago, I would say just like listen to your coaches, listen to your mentor. You're not better than them. You're not going to outsmart them. Like, do the things that they, take seriously the things that they told you to take seriously, and you'll cut down your learning curve, probably by a year.
Okay, good advice. What's your future endeavors apart from tier 1 trading?
That's a good question. Well, I always want to write a book. I've seen what the book writing process looks like, so that's kept me away. But I just want to continue to put out content out there on social media. The Trading Coach podcast has been amazing. That's something I started a couple of years ago and never thought it would blow up as much as it did. But I'm thinking about my legacy. When I'm done trading, when I'm done on this planet, I want to leave a footprint that traders can go back and look at and learn from. I want to look at people like Mark Douglas, where his content, and may he rest in peace, his content is going to be lived on forever, and it's going to help traders forever, even when he's not here. And I hope that what I'm consistently doing on the YouTube channel, what I'm consistently doing on the Trading Coach podcast, what we're consistently doing at tier 1 as far as changing lives, I hope we're just making a positive impact that allows people to come from situations like I was in and become successful, and then just have the right mindset to not be selfish with that tool or with that trait, and help others achieve the same thing, and just help the whole world become a better place, and then become more financially independent and more financially responsible through trading.
Yeah, hopefully it will be a trading book, so I will be definitely gonna go grab it.
We'll see. If I do want it, I don't want it to be your normal boring trading book. I want it to be exciting. Like Steve Burns has a good book called I think New Trader, Rich Trader, where it's more of like a story versus like a kind of a boring textbook. So I would like to share my story, but also throw in a whole bunch of cool trading lessons in there. So maybe one day, maybe.
Yeah, sure, definitely. Wish you all the best for that. So for the new person who where they can find you, or you have any parting advice if you want to add something?
Sure. Yeah. You can find me on social media. The YouTube channel, as you mentioned earlier, the Trading Coach podcast is available on, your favorite podcasting app. I'm on Instagram as well. I'm back on Twitter. I was out. I had account issues for a little bit, but I'm back on apparently. So you can find me over there. Advice would be to find good coaching, find good mentorship, find positive people you can listen to. Your podcast, your channel is a great resource for that. Find people that you trust that are delivering kind of realistic trading messages, and, flock to those people and push the others aside. And if you can do that, you're going to get the proper expectation about what it takes to be successful. And you're going to get some really good advice about what it takes to get successful. And don't be afraid to use those people. The cool thing about the internet is that you have access to people that we've never had access to before. Don't be shy in reaching out. The worst you can hear is no. And if you hear no, you're in the same position you would have been in if you didn't reach out in the first place. So there's no risk. It's a risk-free trade. So do that, and just, believe in yourself, have confidence that you can make it. Anyone can. And trust me when I say that.
Oh, really great advice. Thank you, Akil. Thank you for coming here and sharing your story and your experience. Hopefully the audience will take a good benefit out of it and use it in their practical trading.
Awesome. Thank you for having me.